What's up? Happy Friday. I'm back. All right, so because I'm coming back and I haven't been doing this for a while, I decided I was going to give you guys a treat. And I was going to focus a lot on moving averages today because, as a trader, as an investor, as a coach, my job is to keep it as simple as possible when you're trading and you're investing. All right, so everybody knows that I only like to trade on 3 time frames. Why? Because I like to keep things super, super duper simple. All right. One of the things that I teach all my clients is that you shouldn't be using no more than 3 indicators. Really, 2. All right, 3 indicator max. Anything more than 3 indicators is information overload. And that goes along with averages too. You guys shouldn't be trading 4, 5, 6, 7 different indicators, all right? Or 4 or 5 different averages, or 4 or 5 different charts, all right? I want you to keep it simple. Now, you can trade 100 stocks, right? I look at over 100 stocks a day. But you guys got to learn how to keep it simple if you want to increase your speed. See, this thing, this investing and this trading thing is all about speed. How fast can I take in the information that was provided to me? And then how can I implement it? If you have too many decisions that you have to make before you actually decide what you're going to do, then chances are you're not going to make money. You're going to miss out on great entries. You're going to second guess yourself. And most of us are so smart and so intelligent. We've been doing that our whole lives when it comes to investing. So I want you guys to keep it simple. I'm warning you guys this because when I show you this information, the first thing people are going to do is they're going to try to trade everything. So I want to try to break down all the different averages so that you guys know what to look for. All right. So first things first, guys. Let's look at the spiders, okay? So the spiders is the S&P 500. Now, the S&P 500 is what all traders and investors use as a gauge. All right? So when you're looking at the S&P 500, if you're investing, you definitely want to look at longer time frames. Now, this can be confusing to you guys because a lot of you guys use this. When I pull up this chart, I always make fun of people because I say it's information overload. Probably, I would say about 50% of the courses that you guys take, you're going to hear about the MACD. You're going to hear about the RSI, which is a relative strength index. And if you want to be able to go on TV and kind of go along with what they're talking about on Bloomberg and CNBC, these are some of the things that you have to know. It just has to be part of your vocabulary as a trader or an investor. So you're going to hear about the MACD all the time, right? It's usually one of the first indicators that we learn about in the lower part of your screen when you get into technical trading. The RSI, the relative strength index, is another popular one that you're going to talk about. And then there are going to be all of these different averages as well. All right, but let me break down these averages. All right, because you can't trade all of them. That's why I tell people, look, when I trade, the average that I use the most is going to be the 200-day moving average. Now, because I'm trading off of the 200-day moving average, most stocks are not going to hit their 200-day moving average, but maybe once or twice a year, right? So a lot of you guys don't have the patience to be able to trade it. And even though this is just going, we're looking at the spiders. This is from, let's move this. This was from November of 2020 up until now. If you tried to wait until it touched the 200-day moving average again, you kind of missed out on it. So I'm going to break down all the different averages, right? And which ones everybody uses. So instead of looking here, I'm going to just open up my studies so that you guys can see it. All right. So these are the major averages that everyone uses. Now, I don't want to confuse you because there's some that are for longer term and then there are some for short term. Now, the 200-day is the most used and the most commonly used average to determine if a stock is bullish or bearish. If it's above it, it's bullish. If it's below it, it's bearish. It's really that easy. And traders use the 200-day to try to figure out the best time to buy that particular stock. No matter what stock you're looking at, no matter what foreign exchange currency you're looking at, no matter what crypto you're looking at, everything operates under these principles. Now, most people don't really talk about the 100-day moving average, but they talk about it a lot on CNBC, especially Fast Money. Now, why do they use 100? Because 100 is half of 200, right? So it kind of smooths out what's going on in the market. So the 100 is kind of another swing trading area that traders use. So what they do is they wait until it gets above the 200-day. And then maybe every time it touches the 100, it's also a buying opportunity. Now, why am I showing you guys these averages? Because A, I'm doing consultations and you guys are coming to me and you guys are flipping between 5, 7, 8, 9 different charts trying to figure out the momentum of the market. And if you've taken any of my courses, if you've taken any of my webinars, you guys are going to say, man, Joel trades and invests better than anybody out there. And this joker only uses one chart for long-term trading, one chart for swing trading, and one chart for day trading. And when I say one chart, I mean one time frame. When you guys are advanced enough to be making money consistently on one chart, then you can move into another chart. But to start out looking at 10 different charts, you are on information overload. And you guys are going to make me rich because I'm going to keep doing consultations because you guys are overloading your brain with information that you don't need. You can trade off of one chart and know everything about it if you have the right indicators on it. I can look at a day chart and have a 200-day moving average on it, and I don't ever have to go and look at any other chart for long-term investing. Because if I want to look at a longer time frame, all I got to do is minimize the screen or maximize the screen. This is how you look at it on a shorter time frame. This is how you look at it on a larger time frame. If you notice, guys, I'm looking at information from 2018. I did not have to switch to another chart to do this. And you guys are driving me crazy doing it. Going back and forth, back and forth, back and forth. And then you're confusing yourself and you don't know which chart takes precedence over the other one. Well, this chart says this, but this chart says that. How do I know which one trumps the other? Well, if you use one chart, you ain't got to worry about that. It's just like dating. You date one person, you ain't got to worry about all that other stuff. You date 5 different people, you're going to have problems all the time. If you got 5 cars, and I decide, dang, it's a Thursday, which car do I drive? It's easier when you have one car. And you guys can travel all over the world in that one car. You can date one person and do all the things in life that you want to with that one individual. But yet y'all want to look at 7, 8, 9, 10 different charts. And it's killing me. And it's killing you. And it's killing you on time. Use one chart. 200-day moving average. Now, let's break down the charts. The 200-day moving average is for your longer term trade. If a stock is above here, it's bullish. I ain't got to go back and look at another chart to know that this is a bullish stock. I just pull up the day chart. The 200-day is above it, is bullish. If it's below it, it's bearish. If this is angled down, it's bearish. Right? I've taken out 3 or 4 hours worth of studying for a lot of you guys because y'all be making trading hard. And I keep telling y'all, this is the easiest thing ever created on earth. And y'all make it hard. Like, I'm always winning. And y'all are like, Joe, you just can't possibly be winning all the time because I'm losing, because you don't know what to look for. Now, the 100-day, if you want to have a little shorter time frame, then it's going to be the 100-day. Now, the 100-day is not going to be as popular. The most popular moving averages that you're going to hear about are going to be three. It's going to be the 200-day. That's long term. The 50-day, which that's the one that traders are really using for swing trades. Like people that are looking for 2 and 3 month investments, they're looking at the 50-day moving average. And then you have the 20-day, right? The 200-day, the 50-day, the 20. Now the 200-day universally on all charts are going to be blue. The 50-day is going to always be red. The 20-day is going to always be yellow, right? That's just the universal colors of the moving averages. Now, the 20-day is what a lot of you traders probably need when you're trying to trade 1 to 30 days. The 50-day is for longer time frames, right? A couple of months. The 200-day is for like 6 months to a year. So you're talking about 6 months to a year, a couple of months, probably 30 days or less. Okay? You got to know all three. And it's easy to understand it if you understand the way that I look at things. I break everything down into short, medium, long. Short, medium, long. Short, medium, long. Short term, 1 minute chart. Medium term, an hour chart. Long term, day chart. All right? Moving averages. Long term, 200-day. Medium term, 50-day. Short term, 20-day. Right? Short, medium, long. Short, 1 minute. Short, medium, 50. Day chart, 200-day. If you've taken my courses, within the first 30 minutes, you break down the chart depending on your time frame. Y'all keep mixing strategies. Y'all mixing long-term strategies with the wrong charts. That's why you don't make money and I do. And then you get mad when I tell you that I make money and you don't. And then when I show my receipts, you come into the room, you get all mad. There's no way he's making all this money. Well, what did I do? Create the receipt? I want to see the account. I want to see everything. You need to focus on yourself. I'm trying to show you guys why you don't make money. Don't get angry at me. I've been doing this for over a decade. Get angry at yourself for complicating things. All right? And I talk this way so that you can finally figure out the correct way to look at the market. Now, what are these other moving averages? Now, the 5 and the 13, let's break them all down. The 200-day is usually used for longer term trades, probably looking at a day chart. The 50-day, they're all used, the 50-day, the 20-day, they're all used on the day chart, but it's the time frame that you want to be in it, right? This is going to bounce off the 200-day once or twice a year. It might bounce off the 50-day 4 or 5 times a year. That's why it's a trade that you take over a couple of months. It might bounce off the 20-day 10 times a year. So let's look at it. Let's look and see what the spiders did. On a day chart, I don't have to flip back and forth to 57 different charts. One chart, one day chart. The 200-day, what do you notice? The last time it hit the 200-day, this big blue line was way back here. We haven't seen 200-day moving average since. So a lot of people really couldn't get into the market, but you notice that the 200-day moving average was up. What is the next chart? The 50-day. The 50-day is going to be this red one. So let's do this. Let's just erase everything. Let's erase the 20. I can pull it back anytime I want. Let's erase the 5, the 13, and the 100. Okay? Now, the 50-day, you're going to see it hit the 50-day. What did I say, guys? Maybe 4, 5, 6 times a year. I don't even have to look at a stock to know how many times it's going to hit it. But you don't trade it unless you see the 200-day up. This is what you use as momentum, not other charts. Oh my God, I hate hearing rookie investors and traders do that. I don't have to go up and down different charts to figure out the momentum of the market. The 200-day is telling you everything. The 50-day, if you notice, it hit the 50-day right here. 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 You're talking about 2 or 3 month options. I see a bunch of y'all using 5 or 13 averages, simple moving averages, trying to trade a couple of months. And I'm like, guys, the 5 and the 13 is not used for a couple of months. What the heck are you doing? Well, because I went on this YouTube video, that's because you're on information overload. You want to trade something for a couple of months. Check this out. It hit the 50-day here in January. When did it hit it again? In March. That's a 60-day trade. So if you want to be in 60-day trades, guys, what average do you use? The 50. Not the 20, not the 13, not the 6, not the 200. Okay? If you want to use the day chart. If you want to use one chart. So it hit the 50-day here, hit the 50-day here, hit the 50-day here, hit the 50-day there. How come you didn't make money there? It hit the 50-day here. It hit the 50-day here. Look how many times it won. 1, 2, 3, 4, 5, 6, 7, 8, 9. Why didn't you know about that? Because you got to break down what you're doing in its most simplistic way. Oh, we all knew about this. I didn't have to do that because if you learn the what would Joe do method, which a lot of you guys just don't want to learn, which is fine with me. I don't even have to wait for it to hit the 50-day because if it's going up and then it's coming down and then it's going back up, then you should be in. If it goes up, it comes back down, and then it starts to go back up again. That is the 1, 2, Joe gets in. 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 Joe done won 10 times in a row, and you still struggling as a trader. And we're talking about the S&P 500. You're still struggling as an options trader. And I'm like, why are you struggling as an options trader? I tell you guys where to start. You start with the indexes, the S&P 500, the NASDAQ, or you trade Apple. But y'all don't want to do it. Hard-headed. Hard-headed. Let's look at Apple. Let's do the same thing. All right? And I'm giving y'all this for free. Why? Because I'm tired of seeing y'all lose money. I'm tired of seeing y'all learn 50 different strategies when the most simple basic strategies you ain't even learned yet. You can't learn how to cross over if you ain't learned how to dribble. Y'all ain't learned how to dribble. 200-day. Bam. Bam, bam, bam. Joel made money. Why didn't you make money? 50-day. Let's do the 50-day. 50-day here, could have made money. 50-day here, could have made money. Hit the 50-day. It hit it here, and it went down for a couple of months. This could have been a loss, but look what is the 50-day average doing? It's angled down. When it's angled up, that's when you want to buy it there. Then when you got the 50 and the 200, this is a no-brainer. This is a straight-up no-brainer trade. How come you didn't know about it? Why didn't your teacher teach you that? Why? Okay? Ask your teacher, why did you teach me about the 200-day moving average? I learned about the 50 today. Didn't matter if you bought it at the 50-day because you could have bought it here at the 200-day and still made money. You know why? It's because you're flipping back from 7 to 8 different charts and you can't make a decision. Joel makes a decision really quickly, makes money, be out. Then y'all get mad. All right? Now let's talk about the 20-day. If the 200-day only hits once or twice a year, the 50-day hits about, 5 to 6 times a year. The 20-day is going to be the one that's going to hit it about, 10 to maybe once a month. When it hits it once a month, you don't have to flip back and forth. All you got to say to yourself is there momentum of this stock going up from the 200-day, maybe even the 50-day? If the answer is yes, then you can use the 20-day as an even faster way to make money. So let's take away the 5, the 13, the 100. Let's take away the 50. Because we still need the 200 to show you the momentum. No, I don't have to go to a month and a week and a 2-quarter or 4-quarter or like y'all are killing me doing that. And watch what you see, guys, magically. Now, you go back. Is the 200-day angled up? That's all I need to hear. If the 200-day is angled up and I want faster trades, then you're going to use the 20-day. 20-day is going to be your trades that are like 30 days or less. Okay? See, it hit it here in April. Then it came back and hit it here at the end of April. Then it came back here and hit it in May. Then it came back here and hit it in June. Then it came back here and hit it in July. June, July. Then it came and hit it in August. Well, it skipped August. Then it hit it in September. But watch this. It started to go down. So this is a loss. You lost one time. Boo-hoo. But you won every single month. April, May, June, July, August. Lost in September. You know why you lost here? Because it's not going to win 100% of the time. Then it started to angle up. You decide, hey, maybe I want to buy it at, the 20-day again. And then guess what, guys? Apple started to win again. November, December, January, February. Then it broke below it. Won 4 times in a row. Broke below it. Where did we go to? Probably down to this 200-day. Then once we get above it again, it started to break away again. Okay? Now, why haven't I taught you guys the 200-day, the 50-day, the 20-day, the 100-day? Because you guys need to learn the fundamentals. If you learned how to do the what would Joel do method, you don't need these averages. But I get it. A lot of people see things a lot differently than everyone else. Some people need averages. Some people need Fibonacci. Some people need Fibonacci and they can say to themselves, oh, 50%, 200-day, Joel says get in. This is kind of hard for some people. Some people need the moving averages to kind of understand visually what's going on. I get that. Okay? So it's whatever it's whatever tool you need to use, but going from chart to chart is not the answer. It's not. The answer is a stock going up or down, and what time frame do I want to be in? If you can answer that question, you already done 80% of the work. Is this stock bullish? Yes. Do I want to make money on this for the day, 30 days, 60 days, 90 days, or 200 days? How many days do I want to make money on it? If I want to make money on it in the next year, then I don't need the 20-day. I just need the 200-day. If I want to make money on it in the next 70 or 80 days, I'm not going to use the 20-day. I'm going to use the 50-day. If I want to make money within 30 days, I'm trying to make quick money, fast money. And that's what it seems like a lot of you guys want to do anyway. A, is it bullish? I don't have to switch to another chart to see that. Yes, Apple is bullish. It's been above the 200-day moving average since God knows when. Since it's been above this. This line started to go up, guys, on September the 4th, 2019. And y'all still flipping back and forth to see if Apple is bullish? It's been bullish for 2 years. It's been bullish for 2 years. I still got to go through my charts and make sure that it's bullish. Because you're using all that extra information, all that extra time for nothing. It's bullish. Trust it. Now you got to figure out what time frame you want. Are you going to use a 20-day, a 50-day, or a 200-day moving average? 200-day is for your investors. 50-day is for your swing traders for 90 days or more. 20-day is for your people that want to make fast money. As long as it's above this 20-day, guys, stick with it. It breaks below it and it starts to turn down. Get out of it. Very easy. All right, I'm going to explain the last one. All right, now this one is super advanced. I don't even think I'm going to explain it. I'll explain that one another time. Sorry if you want to learn about the 5 and the 13 crossovers. Book a consultation with me, okay? I'll explain to you guys how to do that. And I'm going to have a lot of videos come out explaining a lot of these different tools this year. That's what I said I was going to do this year. I was going to build a foundation for classes for the first 2 years. Now I'm going to show you guys some individual videos for people. Like I might do a whole session just on Fibonacci. I might do a whole session just on moving averages. I'm going to do a whole session maybe on standard error bands. I'm going to do a whole session maybe on the Ichimoku, maybe on the ATR, okay? So that's coming. All right, so those are your moving averages, right? So I'm going to flip back and forth while I'm looking at your stocks. We might pull up some of these different, moving averages just to see what's going on with them, all right? So because we're looking at Apple right now, let's see what Apple is doing. So let's load the 15-year. You're going to see a whole bunch of moving averages. All right. Let me just... I'm just going to have to just do it every time. Doesn't matter. So if you notice, Apple right now is sitting on its 20. So I'm just going to have to do this every time, and that's fine. Let's take away the 5 and the 13. We'll keep the 100. We'll keep the 4 that we learned today. So, short term, what is Apple doing? It's sitting on its 20-day. It can drop to the 50, it can drop to the 100, it can drop to the 200. All right? This alone is enough information to keep you guys interested. All right? Should you get in now? If you're trading it for 5 to 10 days, you can buy it now if it starts to go up. Otherwise, you wait for it to hit 144 or 136. Or 131. But remember, when it hits this value, it happens only once or twice a year. So when it happens, guys, you got to go big. Because this is what happens. Okay? All right. Let's look at some of your stocks over here. Let's look at Amazon. Okay? Amazon. What is Amazon doing? Well, let's look at the averages. And I'll explain the MACD and the RSI at the bottom as well. I said the Amazon. Amazon. Hey, what is going on? Hold on. All right, Amazon. Right down here, the 200-day moving average, it's angled up. So when it hit the 200-day moving average, everybody should have bought it long term. But you're like, but Joel, I don't want to make money long term. I want to make money short term. Well, when it blew past the 50 and it went to the 200-day and you were buying it here, you had to wait for it to go up, maybe come back down, and then start going back up again. Short term, you could have watched it go up here, bought it right here. Watched it go up here, bought it right here. Watched it go up, bought it right here. Watched it go up, bought it right here. Watched it go up, bought it right here, right? So for a 3 or 4 month trade, as you can see, it had a lot of momentum. The reason why I don't like for you guys to wait for it to touch these is because if you were using the what would Joe do method, and let's talk about the, let me show you guys, if you were using the what would Joe do method, you don't have to really wait for any of those time frames, right? Or averages. You just need to see a move go up, down, and start to go up again. Okay? And then you wouldn't miss it. You see, 1, 2, Joe gets in. 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 All right? And then I know where my stop is going to be. You know, if 1, 2, Joel gets in and then all of a sudden it reverses back to here, then I'm out. I'm risking this amount of money to make this amount of money. But you can use the averages to kind of tell you where the momentum is. If it's above the 20, it's got super duper momentum. But look, even when it hit the 50-day moving average, even if you bought it on September the 4th for 31.50, right? Amazon in 3 days, it went from 31.50, guys. In 3 days, it went from 31.50 to 3,300. It made $150 per share. You know how much you would have made in the options world trading that in 3 days? And all it did was drop to the 50, went to the 20, dropped to the 100, and it stayed bullish. Okay? Why? Because all of these are still angled up. As long as everything's angled up, all it's going to do is usually break to the next average and then it keeps going up. I don't want you guys to get on information overload. That's why I'm not showing you guys all the averages. So let's talk about all the averages again, because a lot of you guys don't believe that the world has been using these averages around you and you just had no idea that they were around. Oh, first things first, I have a webinar. Webinar week is coming in 2 weeks. All right, so I teach the basics of the stock market. You learn the stock market, you learn the options market, learn how to trade it, and you learn how to day trade. It's a three-day webinar. Tell all your friends and family to sign up. I just put the link out today. But, people have been using crossover bullish signals for averages forever. And the most common ones that they use, especially for what you guys are trying to do, and I keep telling y'all, 1 to 30-day trading is the hardest trading to do, but y'all just want to do it. Because you don't want to day trade and get in and out the same day because you're not fast enough, and then you're too impatient to hold it for more than 30 days. So people use crossovers, the 20-day and the 50-day, to kind of figure out when to get into those particular trades. So the 20 and the 50-day have been used for years, okay? The 10 and the 15, the 10 and the 13, or the 5 and the 13 are really, really short-term trades. They're like 6 to 7-day trades, all right? And when they cross over, that usually tells people to get out. But if you notice, you got the 50-day. This says 150 days. I mean, there's so many different averages people use, but you're gonna always hear about the 200-day. You're gonna always hear about the 50-day, and I'm surprised the 20-day is not on this particular chart. Go YouTube it, learn about crossovers if you want to. It will probably help a lot of you guys at least visually be able to see the momentum of the market. And even on this chart, is bouncing off the 200-day, but they're staying with it because the 200-day is angled up. Okay? So I still want you guys to use the what would Joe do method of entry. Okay? So if you see something go up and it comes down and it touches the 20-day, that should give you enough oomph to know that maybe there's support there. So if it starts to go up in value, you get in here, you put your stop right underneath here, okay? 1, 2, Joe gets in, stops right there, okay? So in case something like this happens, you break even. It hits the 200-day, it goes up, down, Joel gets in. Unless it breaks here, Joel will stay with that particular trade, all right? So you can pull up these different averages on charts. Now, I have it here because I just wanted you guys to see it before we start going through all your stocks. Now, because most of you guys are using the shorter time frame, I'm going to stick to the 20-day and I'm going to stick to the 200-day. All right? I might add let me go ahead and add the 50-day as well. So this is the 200-day that we're going to use today. I'm going to add a chart in front of everybody. So we're just going to go to moving average. We're going to go to moving average, daily SMA. Let's go ahead and add the 50. Okay? So we're going to go into the settings. We're going to change this to 50. I know you guys are learning on the fly. We're going to make that red. So we got the 20-day, the 50-day, the 200-day. That's what we're going to look at. All right, now that you guys learned how to use them, we're going to make the 50-day dotted, okay? All right. So let's go through your stocks, Okay? And let's see how these play out. Now, this white line is going to be the 20. I have it really faint because I don't want you guys really trading off of it. I want it to be there just to give you guys some confidence. So, let's say I was looking at Amazon, right? Amazon was going down in price. It hit the 50-day. If it starts to drop in price like this, it's probably going to the 200-day. Some people bought it there. A lot of people bought it here. It started to go green. It couldn't break through the 50, but once it broke through the 50 and you got a crossover right here with the 20 and the 50, now you got the 20 and the 50 and the 200. When the shorter time frames are on top, then you're going to have some momentum. So when the 20-day crossed this 50-day, it was a buying opportunity. It hit the 200-day. The what would Joel do method happen? 1, 2, Joel gets in. 1, 2, Joel gets in. Then all it did was it hit the 20. Some people would have taken a trade here at the 20, here at the 20. You still have the 50 angled up, and this is angled up. So that's a bullish stock. It hit the 20-day there, hit the 20-day there, 20-day here. It broke through it here, and then where did it go to, guys? The 50. Now the 200-day is so far away, you don't really have to worry about it coming all the way down here, okay? As long as everything is still angled up. Now, Joel's not going to get in until this 20-day crosses back over to here. That doesn't happen until right around here. 20-day crosses over to 50. Now you got the 50 angled up, the 20 angled up, and the 200-day angled up. So this is a time that you guys can get in. Now, this is why I don't teach it, because it can become very confusing. That's exactly why I don't do it. But for those that need that 50, because you're buying, because I don't want you to get in here and say, but Joel, it went down over here. Think about this. If you're buying off of the 20, why are you buying off the 20? Let's break it down. Why are you buying off the 20? Why are you buying off the 50? Why are you buying off the 200? If you're buying off the 20, it's because you want to make money in the next 7 to 21 days. So, if this stock goes up, down, and you buy it here at the 20, this is December the 24th. It started to go up in value the next day for 3 days. You've made your money there. It came back down. You can re-enter this trade. You get in sometime around the 5th. You give yourself about 30 days. That's until February the 5th. You made your money. That's why you're buying off the 20, to make money in the next 30 days. If you're buying off the 50, it's because you want to give yourself a little bit more time than that. More than 30 days, like 90 days. Okay? And if you had bought it here in December the 27th, you could have rolled this out all the way to March. Well, March it started to go down, but at one point it was really high. 3-month trades or higher. If you're buying at the 200-day, guys, you got to give yourself 6 months to 12 months for the stock to turn around. Because even when it hit the 200-day, that was March the 4th. It didn't even break higher than that for 30 days. Some of you guys are using the 200-day moving average right now, and then when the stock or option doesn't go your way in the first 10 days, you guys are selling it. And I'm like, guys, you're buying off the 200-day to make money 6 months from now. If you make money faster than that, that's a plus. You got to know why you're using the average. What you guys do is you mix strategies. You mix a 20-day moving average trade with a 200-day investment. I see y'all do it all day long. You're using a 1-minute chart to try to get in on the 200-day moving average. And I'm like, what are you doing? That's why you're losing money. You literally bought a football to a basketball game. We can't bounce that football. You're like, yeah, but I can throw it. I can throw it 50 yards into the hoop. That's all fun and games, but that's not the strategy for this game. Y'all do it all the time. You bring the wrong equipment for the sport that you're trying to play. You guys got to learn how to break it down. If I'm going to use the 200 day, what's my time frame? If I'm going to use the 50 day, what's my time frame? If I'm going to use the 20 day, what is my time frame? And I don't have to go to and from 50 different charts to do it. One chart, 3 indicators. One chart, 3 indicators. That's all you need to trade all 3 scenarios. That's why I do so much better than everyone, because I break it down in its most simplistic way. One chart. Y'all don't ever see me using more than one chart. Now, I might use different indicators. If I want to trade short term, then I'm going to take the 50 day and the 200 day off. This is how you trade short term. Y'all see that? This is how you do it. I'm still using a day chart. And I can trade better than a lot of y'all can in the next 5 to 10 days. You know why? Because y'all flipping to and from 7 different charts. When all you had to do was know if the stock was bullish. And as long as it's bullish, all it's going to do is bounce off this 200 day. This 20 day. On a day chart. You buy it here, you made money. 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 Let's look at another one. CGC. Okay. I get this all the time. Joel, I don't know. Should I be buying this or selling it, or buying it or selling? I don't know what to do. Well, what's your time frame? I want to hold this for 5 years. Well, if you want to hold it for 5 years, you own the stock for 5 days. If you want to hold this for 5 years, wouldn't you be buying it now? Yeah, Joe, but it's going now. You think it's going to zero? A lot of y'all guys really feel that way. Stocks don't go to... Name a stock right now that went to zero. Name one right now. Off the top of your head, name 5 stocks that went to zero. You can't do it. Name a stock that dropped 80%. You might be able to name 3 or 4. Stocks don't go to zero. Not when they've been billion-dollar companies. They'll come back. They'll bounce back at some point. You bought it for a 4 to 5 year investment. It's an investment. Buy more. I'm selling it. It went from, Joe, you told me to get in. It was way up here at 59. Now it's 17. Well, if you saw a house that was $590,000 and now it's $170,000, wouldn't you think it was on sale? If you saw a Tesla that was 59 grand and then all of a sudden that Tesla was 17 grand, wouldn't you think that was on sale? Y'all don't think that way because you're trying to trade. You ain't trying to invest. You're mixing an investing strategy and a trading strategy. That's why you can't make money. All right? I'm in this just like y'all are. I got 1,000 shares. I got 17,000 reasons to be in this. I'm not complaining. I'll complain when it goes to zero. But by then, even if it goes to zero, it doesn't matter. Because when you learn how to trade and invest, you're going to buy its competitors. Why do you always buy the competitor? Because, guys, there are going to be times that you're wrong. And when you're wrong, it doesn't mean that money's not flowing into cannabis. You just got to know which cannabis companies it's flowing into. Y'all think I care if Canopy Growth goes to zero, if this company went from $4 to 18? Y'all get so consumed with losing 100%, y'all don't know how to make 400%. Because you're too consumed with losing. I see it all day long. I'm just going to hold this. Why aren't you adding to it? Because I'm already losing. That makes no sense. Because you're already losing, you're not going to add to an investment? So who are you been talking to as an investor? What investment vehicle on this planet where you don't buy things when they go down in price? And when I talk to y'all this way, y'all look at me like I'm talking down on you. No, look in the mirror and ask yourself that question. Why am I not buying more of this stock? It's on sale. You know why? Because you're scared. You're scared. You don't ever think it's going to go back up in value. Well, you should have never been buying that stock in the first place. Okay? Curaleaf went from 5 to 18. I'm up 400%. I could care less if if Canopy went to zero. I don't have all my eggs in one basket. 200 day, angled up. 200 days, still angled up. Still a buying opportunity. If you loved it at 18, think of it as 18,000. Why don't you love it at 12,000? I'm going to lose more money. It's not how stocks don't go up and then just go straight down. They don't do that. Show me a stock that does that. All right, it's going to stair step up. It's going to stair step down. Then it's going to become popular again, and then it's going to go up again when everything. The reason why the cannabis market is not going up, guys, is because there's other things you can make money on. If you think like an investor, they don't have all their eggs in one basket. They're like, man, the NASDAQ is running right now. NVIDIA is running right now. Why should I put my money in Canopy Growth when NVIDIA is running? When NVIDIA stops running and when crypto stops running, you'll see cannabis start running. But if you're not invested in it to make money, you don't put yourself in a position to get lucky. The reason why I win all the time is because I have multiple investments. And everything doesn't go up at one time. Money rotates. It rotates from one sector to another. You guys got to start learning that. All right? Some things are going to go up. Then they're going to take their profits there. And then they're going to put it into things that aren't up. And then when they go up in price and they overinflate, they're going to take their money out of that and put it into something else. Okay? You got to learn the rotation of money. But you got to know what's got momentum and what doesn't. All right? So, what's happening right now? Where did my 50-day go? 20-day, 200-day. I thought I added the 50. Let's add it again. Hold on. Sorry about that. Moving average. I know what happened. Hold on. Let's add the 50. Make it red. Let's make it like this. I didn't save it, so let's save that style. I'm gonna call this. All right, so now the 50 is there. So what do you see right here? The 50-day is angled down, the 20-day is angled down. Now the 200-day is still angled up. So long term, it's still in play. If you're trying to make quick money right now, this ain't the time to buy Curaleaf. The 20-day and the 50-day are angled down. What the heck you buying it for? Why do I need to look at 5 different charts to see the momentum is down and the 200-day is up? But there's some support right there. Let's look at Canopy Growth. Same thing. What are the charts saying? Quit listening to your thousandaire friends. They don't know what the heck they're talking about. What's happening? The 200-day is angled up, but look at here. That's not good. Now, if you told me, Joe, the 200-day is angled down, the 50-day is angled down, the 20-day is angled down. That's why I sold it, because I want to buy it at a lower price, because it looks like there's going to be some short-term selling pressure. Then I'm going to respect the fact that you sold it. But you're selling it because you think it's going to zero is not a reason for me to sell Canopy Growth, right? All right, Canopy Growth is still worth $6 billion, and they were given $5 billion, right? So it's literally like rock bottom on what it's worth. And they're attached to Constellation Brands, okay? So yeah, you want to see a move. Canopy Growth has to do something to become bullish again, because it is going down. 20-day, if you were shorting it, you short it every time it hits the 20-day. Hits the 20-day, short it. Hits the 20-day, short it. So until it can get, and look, 50-day, short, 50-day, short. So it looks kind of bearish at this point. Let's look at ChargePoint. ChargePoint, which is a battery company, it's an infrastructure play. What is it telling you? Well, the 200-day is angled up, but the 50-day is angled down, and the 20-day is angled down. So there's some selling pressure. Where can it go to? Here? It can go down to here. I don't know why y'all tripping off of it. This is what stocks do. And they do it right around this time. Don't get so caught up in things going to zero. Ain't nothing going to zero, people. This is a $6 billion company that's making charging stations. At some point, it's going to, y'all know there's a 90% chance that every stock is going to always go back to their all-time highs. That's a real stat. There's a 90% chance that it will go back to 49, 48. That's 100% return. It will be in favor at some point. So I get it. If you're trying to trade it, nah, you don't. It's not really above the 20 or the 50 day. If it moves, it'll move to about 29. But if you're investing in it, this is when you buy it for a 4 to 5 year play. Okay? Let's look at Coinbase, #1 cryptocurrency brokerage that's out there. What do y'all notice about the chart? As much as y'all hate cryptocurrency, this looks bullish. 20-day angled up, 50-day angled up. Short-term play, you should have bought it right around here for 7 to 10 days. If it breaks below here, you get out. 50-day is angled up. The 20-day crossed over that. It's telling you that some type of buying is happening right now. If you use the what would Joel do method of entry, you would see that it went up, down, up. Joel would have been in right around there. Where would Joel put a stop? Joel would put a stop right around here. All right. I don't care if this drops from 260 to 240. I lose $20. That ain't even 10%. But y'all know what y'all do? Y'all get in as a trade. It drops to 240. I ain't gotta lose unless I sell, and then you hold this stock for the next 6 to 7 years. Joel doesn't. He take his 10% little loss, and then he go on to the next stock. All right? You're gonna lose. How you lose is what separates me from you. That's the difference between 1%ers and y'all. Y'all don't know how to lose. You don't know how to respectfully lose or gracefully lose. You're a sore loser. I ain't losing. I ain't selling. I'm not going to prove Joel wrong, right? I don't want my spouse to think that I'm a terrible trader, so I'm just not going to sell. And then you hold it for 6 or 7 years, go get another job, and then I don't ever hear from you guys again for 3 years. When you could have just taken your loss, woke up the next day, and then traded again. Okay? Looks like it's ready to go. Looks like it's trying to take off. Back to this resistance area, 266, back to 295. Okay? That's a pretty nice little move. $40 off of 250? Talking about a good 15% return. Let's look at Disney. What is Disney doing short term? And yeah, we're going to stay away from Fibonacci today. My favorite. Okay? What is Disney doing? Well, the 200-day moving average is angled up. It looks like it's trying to bounce off that 200-day moving average. It's trying its best. But why is it struggling? It's struggling because the 50-day is angled down and the 20-day is angled down. That's why it's struggling. It's struggling. It's going to struggle till this 20 is above this 50 and both of them are angled up. And it happened here and it happened there. So that's why people are saying Disney is looking kind of bullish. Okay? So if you wanted to trade the way I trade, 1, 2, Joel gets in. 1, 2, Joel would get in. Or 1, 2, Joel would get in. Or 1, 2, Joel would get in. Why does Joel get in on the third wave? Because the third wave is the truth. It's the moment of truth. The first wave is y'all didn't know that was going to happen. All of y'all think y'all can get in here. Some of you guys that bought it at the 200-day was able to get this move. The people that got this move was so satisfied with this move, they gonna sell. But when you sell off the stock and the stock doesn't go lower than where it started and then it starts to go up psychologically, guys, y'all gotta understand what's happening. Why is the third wave the most powerful wave in my opinion? Because a stock that went up and then it went down, it never dropped lower. That means that's real. Something is holding it up right here to make it go back to here. And if it's going to go back to here, you got a 80% chance that it's going to go back to there. That's why I win. I know how to trade off momentum. That's momentum trading at its finest. Okay, let's look at forward. Y'all see the Fibonacci is everywhere, but we're not going to talk about it. If you want to learn about Fibonacci, go to every other video I ever created. Today is about moving averages. What do you know about forward? I got people, I'm not buying forward. Forward stands for fix or replace daily. Ha, 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 ha. Yep, and then I sat back and made a 100% return in your face. Dang, how did Joe know it was going to go up? That joker just be lucky. I ain't never seen somebody so lucky than Joe. It's not that I'm lucky. I know what to look for. You don't. You too busy discussing and having study sessions with thousandaires all night long, thinking that learning about the balance sheet and and how much money the company is making determines on if the stock goes up or not. Don't nobody care about that. Investors that got real money don't care about that. They want to see if everybody else is buying. And if everybody else is buying, they're going to put their money in it too. Tesla never made money. Y'all, let me say this over and over again. Tesla stock came out in 2012 or 2014. The company never turned a profit until 2019. They went 6 years and was a losing company. Losing. They lost money every quarter. At some point, we're going to make some money. None of my friends who are business-based wanted to invest in it because they're like, why should I buy a company that's not making money? And I said, because you don't understand how money is made in the stock market. Don't nobody care about that. You care about that because that makes sense. Stock market ain't making no sense. Right? If the government is backing it and they're putting money into it and they're putting money into the infrastructure and you got your meme traders and everybody saying, I'm just going to throw money at it just because I want them to change the world, then that's what's going to happen. If a billionaire over in Saudi Arabia decides they're going to put $15 billion in Tesla, it's going to go up. They don't care about the balance sheet. Y'all care about that dumb stuff. I call it dumb because a lot of you guys don't invest with the right thing. Like you're too conservative and too strict on how you look at the market. So when I say dumb, I don't mean it's because you're dumb. I mean it's because you're ignorant. You're using your brain because you're too smart. You're overthinking it. Stop overthinking it. I want you to find fundamentally good companies. But that's not the only reason why you buy a company, because they are profitable. I've seen profitable companies lose money. Peloton, y'all know how much money Peloton makes? And the stock's going down. It's going down. And they make a ton of money. A ton. They sell $2,000 exercise bikes. And there's a high demand for it. Like they can't keep them on their shelves. They charge you $50 a month after they charge you $2,000. Y'all, I paid $2,000 for a treadmill. No, I'm sorry. I paid $2,000 for a bike, guys. I paid $8,000 for a treadmill. I spent $10,000 on some equipment. 10 G's. And it's not just me. And then I still pay $50 a month. And I used it for what, 4 months? I'm about to start using it again. I haven't gotten my money's worth. Just because a company makes money doesn't mean the stock's going to go up. Just because a company loses money doesn't mean the stock's going to go down. So what do you have to look for? You have to look for buying. Are they buying it? If they're buying it, where is it going to? When Ford started to become bullish, it got above the 20, got above the 50, and all it kept doing was hitting the 50. 20, 50, 20, 50, 20, 50. You should have known when the 200-day moving average turned around, you had a couple of times to buy it. Once, 2, 3, 4, 5. Could have bought it here. 6. All you're going to see is it moving up and down. Now, here's what's beautiful about this chart. Y'all don't even realize this, but Ford ain't even hit its all-time highs. Y'all know that? Ford's all-time high is like $20. Ford hasn't even reached the price that it's been the highest, back in 2002. It hasn't even reached its 2002 highs. And that's the gauge everybody's looking at. They're like, oh, if they're making electric vehicles and they got the Ford F-150, and the Ford F-150 is the number one selling vehicle on the planet, and we know investors love putting money in electric cars because they done made Tesla a $700 billion company, the largest company on the planet, and Ford is sitting at 50. That's how one percenters think. They say, hold up, this is 50. Tesla is 700? 50? 700. 50? 700. That makes no sense. Either this is too high or this is too low. Either way, Ford should be about a $250 billion stock. That's 5 times your money from here. 5. That means a $10,000 investment can really turn into $50,000 probably within the next 5 years. Y'all don't see that because you don't know what to look for. How did I know that? Because we just took Tesla from $25 billion to $700. They went from not making no money to being the largest company on the planet and don't even produce the most cars. Y'all see a lot of sense here, but y'all don't want to make a lot of sense out of Ford. That's what's interesting to me. I'm like, Tesla doesn't even make any sense. Okay? But Tesla's a tech company, Joel, and they make their own batteries. That's why they are worth $700 billion. I'm like, do you know how much money they pull in a year? It doesn't reflect what the stock price should be if you one of those balance sheet type traders. And then when I throw that in their face, people get mad. I'm like, you're on this side. So anyway, I'm going to stop ranting. All right. So I don't want you guys to be dumb anymore. Dumb meaning blinded by the way the market moves. I want you to take all the information you have, but you throw it out the window when you see people buying. This is the polygraph, not you studying something all night long. That doesn't make a stock go up. A stock goes up when you see money flowing into it and this volume starts to increase and this 200-day moving average starts to angle up. Because that's real money. That's billions and billions of dollars. Okay? So contrary to how you feel about something, when the powers that be put money into it, it's going to go up in value. All right? So that's Ford. So since we're looking at electric cars, let's look at Lucid. Why is Lucid so popular? Lucid ain't even produced a car yet. They ain't even produced a car yet. And they worth $34 billion. But y'all want to talk about Ford that's been around for 100 years that's worth 50. You got a company that y'all never heard of, almost worth the same amount of money as the company that produces the number one vehicle on the planet, which is the Ford F-150 that's about to go electric. When I keep telling y'all that Ford and General Motors are the new Teslas, I don't understand why nobody can see it but me. I don't understand it. I just don't. But I've been investing for a while, so maybe that's why I'm like, guys, this is a no-brainer. Right? But, we'll see what happens. Maybe it's not. But Lucid is worth $35 billion. It's worth 60% of the value of Ford, and they ain't even sold one car, and one car's not even on the road yet. That's crazy to me. That's crazy talk. Now, at one point, guys, they were worth more than Ford. More. They were worth more than Ford. Whew. When it was a $65 company, which was almost triple where it is right now. This company was worth 60, 70 billion. Ford ain't even been worth 70 billion yet. This company that never produced nothing was worth 70 billion. That's why it sold off, because Cats was like, that's ludicrous. See, y'all looking at share price. You thought this is a ludicrous, it's $64. It can go to $700. That's because you're a rookie trader. It's not how stocks work. When this was $64 a share, it was a 60, it was dang, it looks like it was more than that. I don't know. It was high in price. Okay. So 200 days angled up. You might want to stay away from it. Why? It looks like it has some selling pressure. But it's the 200-day moving average. So if you're interested in buying it long term, you can't be afraid of this, even though you know it might go lower. You just have to ask yourself, all right, if I'm going to put 10,000 into this because I think it can be worth 10 times its value in the future, maybe I shouldn't put all 10,000 in. Maybe I should put 2,000 in this month, 2,000 in another 2 or 3 months, 2,000 in, a month after that. Okay? And we call that scaling into a company. All right? Let's look at, is that the last car company? Did we even look at Tesla? Let's look at Tesla. The largest car company on the planet. Don't even produce the most cars. Now, look, I love Tesla. I made a killing off the stock, and I own a Tesla. And I got an order in to buy a Tesla. So I love Tesla, right? But even I'm looking at it like this. Elon, boy, you a funny cat. Like, you didn't trick these cats into giving you $700 billion. Your company almost worth as much as Apple. Well, not as much as Apple. Apple's $2 trillion. But your company is worth as much as what? Facebook? Hold on, let me see how much Facebook is worth. Facebook is $1 trillion. Your company is almost worth as much as Facebook. That's funny to me. It's funny. Anyway, looks bullish. What was it doing? Let's erase all this stuff. Let's erase. I lost 3 or 4 people. Sorry. If you didn't know I rant, sorry. All right. 50-day. 50-day looks like the place to buy Tesla. 200-day. Remember, it's going to hit the 50-day more than it hits the 200-day. So when you got the 50-day and the 200-day right there, ooh, that's a buy. All right. 20-day wasn't really holding. 20-day is not holding. But the 50-day is. Okay. So it looks like it's somewhat bullish. 1, 2. Joel might take a shot at it. But I don't really like buying it there because y'all know my number. I'm going to always pull out the Fibonacci. If it pushes from one value and it starts to go down, Joel does say get in at the 25 or 50% area. But I'm liking 50. And if I'm liking 50, I'd rather just buy it down here at the 200-day. Okay? Because it looked like it got here, it struggled. It got here, it struggled. It got here, it struggled. It looks like it wants to kind of test this 200-day down here. But if you're going to take a shot, take a shot here. Hit the 20-day. You would be up $12 right now. Put your stop at 700 and you good. You don't have to get in or out just because Joel said it. But if you bought it and your entry was tight and you got in right at the 20 at 701, today when it hits 712, you got to put your stop at 700. So if it reverses in the next hour and goes to 700, you can't say, well, I'm just going to hold this overnight because I only take a loss if you sell it. Because you can wake up tomorrow and that bad boy can be sitting down here at 670. You could have just taken a small loss or broke even, but you rather take a loss. So I don't mind you guys doing that if you're investing, but if you're trading, that is terrible. Terrible. That's the worst trading strategy I ever heard. Investing, great. Trading, terrible. Because it happens all the time. What if somebody drives a Tesla off the cliff and then tomorrow the stock down 10 or 15%? You have no control over that, right? So hey, I'm just gonna go to sleep and see what happens. That's what we call gambling. All right. So you guys gotta understand what you're doing and why you're doing it. Okay. All right. Let's look at we looked at Apple, Amazon, Coin, Disney, Ford. We didn't look at Facebook. Let's look at the FANG stocks. Let's look at FANG. All right. Let's do FANG. All right. So Facebook, bullish. But Joel, I want to look at this chart and that chart. Why? It's bullish. One chart. But Joel, I don't know. I just don't feel comfortable just looking at. Well, then go look at 12 charts. I'm sorry that you learned, the wrong thing to do. Sorry. I'm going to be a lot faster in my trades than you are. The stock is bullish. I don't have to go back and forth through charts to see that this is bullish. Because the 50-day is telling me it's bullish. The 200-day is telling me bullish. The 20-day is telling me it's bullish. I don't have to flip back and forth through charts. Why y'all looking at a 1-minute chart for an investment? Y'all do that too. The stock is sitting at 372, 377. This is what y'all do. Kills me. You go down to a 1-minute chart and you want to trade something like this. You trying to trade the Ichimoku like me, which is fine if you day trading. But what does this day trade got to do with a trade you gonna hold till next year? I don't understand that. All right. Yeah, as a day trade, what's today? Friday? You were day trading Tesla. If I was day trading Tesla, how do I day trade something like this? How do I do it? How? Well, let's do it Ichimoku advanced. That means we're going to add the 20-day. How do I trade something like this? Well, first of all, this is what most of y'all do, and it drives me nuts. You study Tesla all day. You made money the last 2 days. You get lazy and just say, I'm just going to buy it at 9:30. And then you buy it at 9:30 and you make a whole bunch of money. And then the next day you say, I'm just going to buy it at 9:30. And then you lose everything. I don't want you to trade that way. I want you to think stuff out. Joel would have said Tesla moves $21 on average a day. How many people knew that? How many people can truthfully say they knew that Tesla on average in the last 14 days moves $20? That means if I buy it at 365, when it gets to 385, what am I doing, guys? I'm selling it. Joe, how did you know to sell it at 385? Because this bad boy moves $20. It's telling you. Why didn't you know this? Okay. So if I know it's going to move $20, I first look and see how much it's up at that point. If it's 9:30 to 9:45 and it hasn't moved $20 yet from the lows, Joel's going to trade it. So I'm going to go to the lows, 364. Joel can't get into it if it's at 384. Joel just not going to do it. Oh, this is Facebook. Dang it. Let's pull up Tesla. Sorry about that. Spent all that time talking about Tesla and was wrong. Tesla moves $20. Let's start over. Tesla moves $20. So I'm going to go to the lows of the morning and I'm going to go to 702. And I think it can go to 722. Okay? So if it can go to 722, and we'll do Facebook again since we were looking at it, then I can trade this up to about 722. Now, I don't know if it did it today or not, but at least I know it's got room. I don't trade nothing unless it's got room to move. Tesla got $21 to move. Most of y'all don't even ask yourself that before you trade. Joel then's going to get in right around 9:45. 9:45 comes. We're underneath the Ichimoku and the 20. I don't like that. Joel probably wouldn't have traded this until we got above this Ichimoku and this 20. That's right here. So if I was trading it, hold on. If I was trading it, I'm going to wait for it to drop to about 25 to 50, start to go back up. 1, 2, 3. Joel would have been in somewhere around 705. Now, why would I have taken that trade? I got to ask myself. It's 950, 955. I like to be in things before 10, so that gave me a chance to get in Tesla before 10. Now, why didn't I lose? Because Tesla went up, it went down, then it started to go back up. Is Joel going to get in way up here? No. Joel's going to get in somewhere around here. 1, 2, Joel gets in. 1, 2, Joel gets in. How does that look? It's going to look like this. How much would Joel have made if he was trading Tesla today? Well, you take out a calculator. As a day trader, Joel's going to use anywhere from $10,000 to $20,000 to trade. All right, let's just say I was trading $10,000. Before I even take the trade, if I bought this around 706, and I know it can go to 724. Wait, hold up, 700. It can go 706. It can go to 722. So what? Another $16. Before I even buy it, I have to ask myself, am I willing to make $226? Because I know it looks like it's a big move, but the amount of money I'm going to make is $226 per 10 grand that I use. So if I know it can go 226, I'm probably, when it gets halfway there, probably want to pull my stop to break even. Once I'm up $100, pull my stop to break even, let that bad boy run. All right, at least I know I'm going to make $100 for the day. If it reverses and goes back to 706, let's see if it does it. I guess it didn't. Hasn't done it yet. I could still be in this trade. I can be asleep and not care and know that I made my $100 for the day using $10,000. Now, a lot of you guys don't have $10,000. So, if you wanted to trade Tesla, you could have done the same thing. Joel got in right around 10 o'clock. You're going to go over here. You're going to get in around 10 o'clock, but you're not going to use $10,000. All right? You're probably going to go to the options market. Do not trade. Man, I can't stand trading things the day that they expire. So if it expires today, I'm going to go to next week. Which is September the 3rd. I'm literally going to buy the one that has the most contracts. Which one is that? This one, 12,000. Nope, this one has 12,300. But, do I want to pay 1,300 or do I want to pay 140? A lot of you guys are like, Tesla's not going to hit 750 by next week. And then I say, well, you just don't know how to trade because it doesn't have to hit that. Who taught you that? What teacher taught you that it had to hit the strike price in order for you to make money? You didn't pay how much for what options class, and they told you that it had to be above the strike price for you to make money? So, you get in at $10. You get in at 10 o'clock. I get in at 10 o'clock. I spend $10,000. I didn't make 255 because I don't even know what it went to. I just knew where it could go to. But y'all saw that it went up. I could have brought my stop to break even. I would have been straight. You would have done the same thing, but you would have spent $150. $150. Let's say you spent $1,500. Let's say you spent $1,400 at 10 o'clock. This is a real number. Y'all see this? This says 143. Let's say that was $1,430. You know your $1,430 would have been worth $2,000 in 1, 2, 3, 4, 5, 6, 7, 8, about 15 minutes. From 10 o'clock to 10:18, you could have turned $1,500, $1,400 into $2,000. You could have made $600 trading the same exact way that I trade. We never hit 750. Like, guys, y'all need to get educated from people that actually trade the market. I'm tired of seeing y'all lose money. Vet the person that's teaching you. If they ain't showing you what they doing and how they doing it, they probably ain't doing it. The strike price never had to be hit for you to make money. I don't know who taught y'all that. That's the first thing we talk about in my options class. Like, what are you talking about? Who are you talking to? Who's helping you trade? Where are you getting your trades from? All right? That's why I try to teach you guys how to do it on your own. Don't ask me to trade for you. Don't take my trades. You can get my alerts. You can get my education. But this is so that you can teach yourself the real. Because a lot of you guys don't know it. Like, there's a lot of fundamental basic stuff that y'all just have no clue of. And that's why y'all struggle trading and investing. Okay? Easy money you could have been making. How did we know to buy Tesla? A, we knew that Tesla had 20 points that it can run. B, we knew that it was bullish. Y'all wake up in the morning and decide you gonna make Tesla move. That's your biggest mistake. You think you can outsmart the market. You can't outsmart the market. You gotta buy when the momentum is there. I do this analogy all the time. I know a bunch of people that trade one way all the time or play sports one way, right? If you're a football team and you play indoors and then all of a sudden you show up in Pittsburgh and it's 20 degrees outside and it's snowing outside, you can't run the same game plan you was running. But y'all try to do it. Bump that, it's snowing. We just gonna slide all over the place. No, you need some cleats. You might need to put on some Under Armour so that you can stay warm. Nope, we just gonna wear the same pads we got and we just gonna slide all over them. We're gonna keep running, we're gonna keep throwing. But it's windy outside. Doesn't matter. When you trade one way, you're gonna make the same. No, you're not. Who are you talking to? Who are you talking to? You're obviously talking to somebody that don't know how to make money. I hear it all the time. I had consultations all week long. And I heard all the horror stories all week long. That's why I sound the way that I do on Fridays. Has nothing to do with you. Has everything to do with what I hear. And what I get upset about when I hear where you guys came from and where you guys are getting your information from. And it be legitimate people too. And I'm like, wow. These cats, obviously, like I literally want to call them up and be like, yo, are you trading for real? Because this makes no sense, what you're educating and teaching. This makes no sense. Okay? So I want to make sure that you guys understand that you can make money quickly in the options market and the stock market. You guys got to know what to look for. All right. Let's look at Google. Let's go back to our charts. What do we notice? It's bullish. Do I have to flip back and forth to look and see that chart's going straight up? Well, Joel, I got to double check. Double check what? What are you double checking? No, what you're doing is you're so uncomfortable, you need 15 training wheels for your bike. You only need one set of training wheels. Y'all got 15. Take away one, still got 14. Take away 13, still got 2. At some point, you got to take away those training wheels. And that's where you don't understand. So I get it. It's because you don't have the understanding of what's happening. This is bullish. It's bullish short term, medium, and long. What's there to see? Well, should I buy it today? Well, it's at its all-time highs. Why would you buy it at its all-time highs? When you know it's going to do this. You know it. You know it's going to do that. You know it. Joel teaches every week for the last 3 years The market stair steps up, down, 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 up, down. How many times I gotta say it? Up, down, up, down, up, down, up, down. Doesn't go in a straight line. Up, down, up, down, up, down, up, down, up, down, up, down, up, down. But yet, y'all still wanna go buy it here. And you know it's gonna go up, down, 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 all the way up. The most common pattern that's in the market, 95% of y'all don't trade within that pattern. Y'all either buy it here or you try to buy it at the lows. You try to buy it here or you try to buy it at the lows. Old Jolie Joel getting in right there. That doesn't make sense. That's midway. You're losing money from here. And it's too high. And it's almost close to here. That's because you don't know how to trade. And you don't know how to invest. That's why I'm a 1%er and you aren't. But I'm trying to teach you what to look for and why it's happening. Why is Joel buying it here? Because the risk to reward is way higher, because when a stock does this and this move is going to be higher or bigger or just as big as this. See this move? 2, look at this move. This move is going to be equal to that move, and it's usually bigger. Y'all see how the moves got larger? Y'all see this? Here, 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 here. Y'all see how it got larger? Why did it get larger? Wow, Joel, I never noticed anything like that, because you don't know what to look for. And I'm trying to teach it to you for free. For free. Y'all still be giving me a hard time. I give y'all information for free, and y'all be giving me a hard time. And then when I be like, I'm tired of arguing with you, show me some receipts. Joel, you're arrogant. Well, show me some receipts. What have you done? Then they shut down. They don't want to talk no more. Bunch of y'all thousandaires got a whole bunch to say, but then when it comes to putting your money up, you don't want to say nothing. Then when Jolie Joel says, put your money up, I'm the bad guy. Don't argue with me if you don't have a strategy and you ain't putting no money up. Period. Because by me putting money up, it makes me accountable. It puts a bullseye on my chest, and I have to explain to people why I did it. See, you don't want to do that. Y'all don't want to do that. Y'all want to take the easy route. Take the hard route like me. Call a trade, take the trade, explain the trade, and then if you lose, explain why you lost. That's all I want from you guys, to understand why you're doing it. I don't care if you lose. I lose all the time. I don't care. I don't want so much. I can afford to lose 100 times in a row. And I'm still good. My legacy is in place. My accounts are in place. You guys got to learn why you're doing it. Why? Why am I buying this? Why am I selling it? Joe, I'm selling it because I'm tired of all this red. That makes no sense. You're selling the stocks in your account that are red. That makes no sense. As an investor. As a trader, yeah. You want momentum to be green. As an investor, I want to see red all day. Why? Because I'm not cashing in for 5 to 10 years. I don't want to see no green. I want to buy everything on sale. And in 3 years from now, I want to see green. But early on, I don't want to see green. I get mad when I buy something and it starts going my way. And y'all like, huh? That don't make no sense, Joel. You get mad? Yeah, I get mad because I haven't put all my money in yet. See, you put all your eggs in one basket one time. That's why you happy. You not trading like the 1%ers. Don't no 1%er put all their money in at one time. They break it down. If I got 10,000 I want to put into a company, I'm going to put it in stages. 2,500 here, 2,500 there. All right, 2,500 here. I'm going to dollar cost average in, and then I'm going to wait for it to go up. That's what we're doing. Ain't nobody putting all their money in at one time but you. I just want to buy it one time, go away, Joel, and come back rich. Great. Do you have enough money to do that? If not, you got to learn how to do it. So, intuitive surgical. Intuitive surgical. What do we notice? It's bullish. Bullish. It's bullish. Joe, how do you know that it's bullish? Because this stuff is angled up. That's real money flowing into this real company, making it go up. The 20-day is intact. If you wanted to buy short term, bam, you could have bought it there. Bam, you could have bought it there. Bam, you could have bought it there. When it hit the 50, bam, you could have bought it there. Bam, you could have bought it there. 200, bam, you could have bought it there. I mean, I didn't even know y'all was picking this stock today. But I can trade it better than all your buddies that work for Intuitive Surgical. I will. Look at that. Buy. 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 Yeah, Joel, but you're playing Monday morning quarterback. You're just going backwards and looking at. I have people to tell me this. Well, how the heck am I going to know what to do if I can't research what happened? Like, does that make any sense? It's easy to just go back and say what you could have done. Really? It hit the 200-day here, here, here. It hit the 50-day here, here. It hit the 20-day here, here. I mean, I'm sorry. It's easy. You've been making it hard your whole life. I haven't. It's easy. And when I lose, I take my loss. That's the part that's different between me and y'all. Because see, let's go back to 2000. Let's go back to here. Let's talk this out. What's happening right here? What's happening? This is angled down. 200-day is angled down. 20 is angled down. That's selling pressure. Short term, I'm not going to buy it when this is down. I'm going to buy it when this is up. So even if I took the 50 and the 200-day away, when this started to angle up, you could have bought it there, 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 there. You could have bought it here. Now we're talking about all the way to 2000. This is March 2020. This is when COVID, this is when y'all was sitting at home learning how to do this. Learning how to do something I've known how to do for 10 years. All right? You could have bought it here, short term, short term, short term, short term, short term. Now, does it mean that you would have been up the next day? No. If you bought it here for $577, for 5 days, you were sweating because it went from $577 all the way down to $547. $30 is a lot, guys. That's a 9 or 10% loss. But what y'all are doing is, it's red, so I'm going to sell. You've been in it for 4 days. Then it came back. Then it hit the 20. Then it went up. Then it hit the 20. Then it went up. Then it hit the 20. And then somebody bought it here. And then it went from 708 to 630. And you felt like a loser. Okay? And I understand why. But what you should have done was you shouldn't have been holding it from here to here. You should have been holding it from here to here. That's the difference between me and you. You would have bought it for $730. It would have gone to $630. You would have said, well, I just got to hold it until it comes back. So you would have held it from September the 21st all the way to October the 7th. Now, in that amount of time, Joel would have lost $30, would have been on to the next stock, and would have made his money. Or Joel would have said, I'm taking my money out and waiting for it to be bullish again, and I would have got in right here at 690. And then I would have made my $30 back when you made it. But I wouldn't have had to have this excruciating pain that you experienced. Because as a trader, I would have been out of this bad boy. As an investor, I would have been licking my chops because I would have bought some at 730. I would have bought some at 700. I would have bought some at 640. And then my average would have been 690. And then when it went to 770 and then back to 690, I can stomach the move because I dollar cost average all the way down here. Okay? And now we're sitting at 690 again. Why is this dropping to 690? Why is 690 that number? Because it was a support level way back here. Support level way back here. Let me flip to another chart. Why you got to flip to another chart? All you got to do is hit the minus button. You want to look at more time, you hit the minus button. I don't have to go to a month or a week or a quarter chart. I just did it by hitting the minus button. Okay? Here, 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 here. So it's a bullish stock. Should you be buying it here? Nah, it's too high. Unless you're day trading. And that's another thing. When I say no, you shouldn't buy it, I get a message the next day. Well, Joel, I took a trade on it and I made a 50% return. Okay, well, we talking about investing. We looking at a day chart. And I'm happy for you. I truly am. But you didn't ask us if you wanted to day trade, because day trading is totally different. That's this chart. Okay? That's this chart. And if you were trading on this chart at 9:45, 9:40, I would have told you not to buy this. But it could have gone either way. You could have bought it right here, made a little bit of money, and then it came back. But once we broke underneath this Ichimoku, this was bearish. Anytime you get underneath that yellow line and it starts to angle down, why are you in this trade? Why are you in this trade? Why? Because you studied it all night? Let's look at Jumia. 240. I got to get out of here in 20 minutes. All right, Jumia. Let's look at it long term. Long term, guys, whether you like it or not, it's still a bullish company. The 200-day is still angled up. That means that anything underneath this 200-day, if you're buying it 4 to 5 years from now, is a buying opportunity. I've been buying Jumia hands over fist, and I've been getting so much flack about it. And I'm like, guys, it ain't been 4 5 years. When 4 5 years go by and we sitting at $23, then you can say, Joel, that was a terrible call. You can't tell me it's a terrible call 5 days later, or 5 weeks later, or even 5 months later. If you're buying it as an investment, if you're buying it as a trade, that's on you if you're losing money. What is this telling you? This red line is going down. The 20-day is going down. Down, guys, down, down. The Ichimoku, if you were looking at the Ichimoku on the 1 hour chart, and you bought this thing on August the 11th, then you ain't learning my strategy. Because Jumia had been it started to go bearish right around August the 10th. And it's been underneath the Ichimoku from August the 10th up until about August the 23rd. So it was bearish for 2 weeks. And then it finally got above the Ichimoku. It got above the 20. And then it started stair-stepping up. And now it's bullish short term. It's bullish short term for your traders, 1 to 30 days. Where would Joel have gotten in? Joel would have waited. I don't care about the person that bought it here. Good for you. Joel ain't getting into way up here. Why? Because I want to see it stair stepping. So it went up, went down, started to go back up. Joel probably would have bought it somewhere around 1932. And then it went all the way to 21.32, went about $2, and then it dropped. And it's still bullish. Where would my stop be? Well, once I got into this trade, my stop would have been underneath the second move, 1, 2, 3. My stop would have been there. Well, Joe, that's the first time you're saying anything about your stop. No, it's not. No, it's not. This says stop loss. Where does it say put your stop loss? Put your stop loss at the lowest point of the second wave. Stop loss is put at the lowest point of the second wave. 1, 2, stop. 1, 2, stop. 1, 2, Joel gets in, stop. 1, 2, 3, Joel gets in, stop. Been there forever. I didn't just add this. I've been showing y'all this for over 3 years. All right. So let's go back to the charts. 1, 2, 3. Joel, even if he lost on Jumia, I would have lost 60 cents. 60. I was up $2. That's why I'm a 1%er. I risk how much? 50 cents to make $2, that's a 1-to-4 ratio. I can lose 3 times and win 1 time and still break even. That's how your advanced traders are trading. So short term, it's bullish. Okay. We looked at Lucid. I don't know if we had determined if it was bullish or bearish, but 1 hour, it's hitting the 200 days. So long term, it's a good investment. Short term, it looks like it's going down. Microsoft, 200 day. Well, you missed the 200 day here. That was March of 2020. Then it started to go bullish. I didn't have to go to and from charts. I could have kept my one little day chart. And when it went up and it hit the 20 day, you could have taken trades. Or you could have waited till it hit the 50 day and taken some trades. You know, even if you took it here, okay, take your loss on Microsoft. That's fine. Keep trading it again. Because then every time it hit it, it broke through it a little bit. Still went back up, hit the 50. Went back up, hit the 50. Look at all these different times you could have just traded it. 3-day trades. 3-day trades. You could have just made money on it. Look at all those times it hit the 50 day. 50 day, 50 day, 50 day, 50 day, 50 day, 50 day, 50 day. And now it's just hitting the 20 day, 20 day, 20 day. Should you be buying it here? It's way up here. Just wait for it to hit the 20 or the 50 day. Nvidia, my favorite. Why I've been so bullish on Nvidia? Well, A, there's a semiconductor shortage. How long have I been saying that? Forever. I've been saying it forever. Now, I'm the number one person putting out receipts, telling y'all what to buy, giving y'all information. I came out, I said, yo, there's a semiconductor shortage. You know what a shortage means? A shortage means that there's not enough out there. The demand is high, and there's not enough semiconductors to go around for everybody. There's not enough. So if there's not enough and there's a semiconductor shortage, and they're involved in everything, computers, phones, they're the number one semiconductor company on the planet. They're involved in phones, they're involved in electric cars, they're involved in cryptocurrency. Like literally every single thing that you can name that's mechanical, Nvidia is involved in it, and they are the best at it. And I've been saying, please buy Nvidia. Please buy it. Please. There's not too many companies I come out and I say, this is like one of the most no-brainer trades ever. Okay? There's a couple of companies that I told you guys were no-brainers. Apple was one. Nvidia was one. Square was one. Okay? So, what do we look for? Soon as the 200-day moving average started to angle up and we started to hear that there was a semiconductor shortage in 2020, it was a no-brainer that we were about to hit all-time highs and keep hitting all-time highs. Why? Because if there's a shortage on a company that's bullish and it's the number one company in its particular sector, you can read it like a book. And all you had to do is wait for it to hit here, 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 or take away the 200. All right, Joel, it didn't hit the 200. Great. Then it hit the 50 day. Remember, when you're buying at the 50 day, it's not for a trade that's going to happen in the next couple of days. Now, you can make money in the next couple of days, but it's usually a 3-month, 4-month trade. It's a medium term trade. So you could have bought all in March and April. You could have bought it all right here. 1, 2. Remember, it's going to hit the 50 day like 4 or 5 times a year. 4 or 5 times a year, it's going to hit the 50. 1 or 2 times, it's going to hit the 200. It's going to hit the 20 day like once every month. So when it hits it every month on a bullish company, 20 day, Sometimes it's going to lose the most also. So it looks like it would have been a loss here. It cut through the 20-day right here, and it looks like it was a loss there. So you had to really look at the 50-day to kind of get the move of NVIDIA. Okay, but it gave you some great opportunities. 1, 2, 3, 4. When should you buy it again? Well, at least when it hits the 20-day, it ain't nowhere near the 20. Does that mean you can day trade it? Yeah, if you're day trading something, guys, none of this matters. None of all the moving averages we looked at today, none of that matters when you're day trading. And I keep trying to explain that to my clients. This does not matter. What happens on a daily basis it's literally like that's its only time frame. It's only like I don't care about it being bullish. It could be a bearish stock and it can make you the most money in a day. So you got to know what chart to look at. So if you're going to trade this daily, I don't care about no averages. The only thing I care about is A, how much does it move a day? $7. Okay. Has it moved $7 today? I don't know. At 8 o'clock this morning, it was at 220. Well, what's $7 plus 220? It's 227. What number are we sitting at right now? 50 cents from what, guys? 227. Okay? It's going to move $7. If it moves $7, why are y'all still in it? I'm going to tell you why you're still in it, because you're not using the ATR. You trading and hoping, praying. I got to make this money this week. Please move. Now, the ATR can double. It can. But Joel's not going to trade off of that. Joel's going to look at 930, and if we haven't reached 227 yet, I'll take a shot at it. When am I going to take a shot at it? I'm not going to take a shot at this if we underneath here, because that's selling pressure. I'm only going to buy it if there's buying pressure. I don't have to look at 27 indicators to find buying pressure. I use one chart. The 1 minute. It's bullish. Joel gets in right around 9:45. He gets in at 222. Joel knows when he's getting out. 227. Did we even reach 227? Look at that. We hit 222, 226.66. We got 34 cents away from my target. How come Joel always knows where the stock's going to go to? Because Joel's a real trader. Bonafide, real. Actually trades. Okay? And we can actually double that number. Joel, the ATR was $7 and you made me get out at 227 and it went to 234. Okay, great. I never said that it was it only hits 227 and that's it. Joel trades around that number so that he can give himself a chance of winning. And if it gets there and it goes higher, sometimes you got to put yourself in a position to be lucky instead of trying to make luck. Be in position to get lucky. Okay? This thing might go to 250. But I'm not going to take that trade off of 250. I'm taking the trade off of 227 because that's the conservative and being aggressive at the same time. And what do you guys notice? 1, 2, Joel would have got in. 1, 2. How many times could you have gotten into this and not been wrong? You wouldn't have been wrong at all. Look at all it did was stair step all day long. 1, 2, Joel get in. 1, 2, Joel get in. 1, 2, Joel. It never reversed back to the price that it started from, except maybe right here. But again, Joel would have not been in that trade at 12 o'clock. Let's look at Pfizer. Let's look at Pfizer. Would Joel have been trading Pfizer this morning? But so-and-so was talking about Pfizer, and Pfizer is I don't give a dang who. I don't care if Warren Buffett, Obama, and whoever was talking about Pfizer. Pfizer this morning at 9:45 was underneath here. Therefore, Joel's not going to trade it next stock. but I studied it all night, and I was looking at all these other different charts, and it was bullish, and they're making this vaccine drug, and you're using too much information to trade. That has nothing to do with what about to happen in the next hour or two. Nothing. But you're trying to make it because you're trying to find that thing, and I'm trying to show you what that thing is. But you don't want to believe that it's it because it's so simple. Because stocks are either going to go up or down, people. There's either going to be buying pressure or selling pressure. And that's real. And then you know where it can go to. Even if it drops in price. Pfizer moves $1.30. Okay, let's say you're a counter trender and it's $47.50. What's $47.50 minus $1.30? It's going to put you at what, $46.20? What price y'all think we came down to? 46. We got close. We got within 60 cents. We got close to 46. I got closer than where you thought it was going to go to trying to guess. You can use the ATR to figure out how much it can drop. But I don't like counter trending like that because usually when a stock goes down in value, it continues to go down. 80% of the time, a stock is going to trend in one direction. So if it's been trending down all day, you got an 80% chance that it's going to keep trending down. The days you see a stock drop and then go back up, that only happens, 2 out of 10 times. Put the numbers in your favor. Okay? All right, let's look at Peloton. I got 5 minutes to get through the rest of y'all stocks. All right, Peloton, 200 day. Peloton's been struggling. It's been struggling. I sold 49 shares at $89.50. So y'all know I'm mad. It's at $120 right now. I'm waiting for it to come back. It ain't never coming back. It might. Joel's mad. This is one of the few times I got shook out of a stock. Why? Because I've seen so many other stocks when they had negative news like this that I got caught in, and I told myself I would never get caught in a stock like that. Now, mind you, I didn't roll this stock from way down here, so I ain't really that mad that I got out here. But when negative news comes in, I can always get back in, and sometimes you might have to get in at a higher price. But it's still not out of the woods. We're still not out of the woods. Why? Because we're underneath the 200. Now, underneath the 200 day is a buying opportunity. But that negative news is what caused me to not hold it. And I should have stayed in it, or if I believed in it, I should have bought more. I literally sold it on the day that it hit its low. And it rose from that day. Isn't that crazy? That rarely happens for me, that I sell it. Now, I didn't sell it at the absolute low. The absolute low was 81.1. So I saved myself about $8. But I did sell it on this big bar here. And a lot of you guys sold as well. But we're underneath the 200 day. So if you're going to buy it, this is the best buying opportunity. But as you can see, the 20 day is underneath the 50. And the 50 is underneath the 200, which is selling pressure for a while. Where could we come down to? We can come down to 101. We might come back down to 89.50 where I can buy it back. And I will be so happy buying it back at 89.50. Let's look at PayPal. Excuse me. PayPal. One of my favorite investments. I made y'all so much money off of PayPal. Please send me a gift in the mail. All right, couldn't wait for the 200 day. This bad boy is so bullish, you got to use the 50 to get in. And that's what I want you guys to start using. The 50 day is for your medium-term investment areas to buy. The 20 day is cool, but 20 day is for, like, you really want to really know what you're doing. Because, see, it hit the 20 here, here, here. Then you kind of lost. Then it hit it here. Then there was a loss. Then it won again. Wins about 3 or 4 times, then it loses. But the 50 day is so strong, it doesn't really lose. And the 200 day doesn't really lose either. That's why I want you guys to really concentrate on the 50 and the 200. I want you to use the 20. But just know that there are more trades. There's a 20-day trade like every month, but out of the 12 months, you probably gonna get maybe 4 losses. Okay, so you got to keep that in mind when you're trading the different averages. And when the 20-day crosses over to 50, there's an issue. But when it crosses back up and you're in it, using the what would Joe do method, you should be straight. But we're underneath the 50 now, so I want you guys to be careful. But if you're going to use the what would Joe do method 1, 2, 3, you might want to get in there, put your stop there at 273. All right, let's look at Roblox. Roblox just IPO'd, so it hasn't been a company that's been out that long. IPO'd on this date, meaning it became a company that you can invest in back in March 2021. And as you can see, it's been holding this trend line right here. All right, so it's been going up. Y'all see that? It's trending to the upside. I didn't have to go to a month chart or a week chart or a quarter chart to see this. All right, it's going up. We're above the 50. Now, where would Joel get in? I'll wait until maybe it hits the 50 again, or I want it to go 1, 2, and Joel will start getting in. If I'm trading, I'm going to put a stop there. If I'm investing in it right now, well, shoot, it's on sale. 103.87 was the high. It's at $85. It's 18% off. Wouldn't you love to buy a car 18% off? A house 18% off? You guys got to learn how to do that in stock as well. Let's look at AT&T. Now, AT&T gets people because they offer a very high dividend. I tell people don't get caught up in a dividend. A dividend is what a company will pay you to own it. I don't know how high that dividend is. It might be 6, 7%. I don't know. It's pretty high. But it looks like we have support here at the 26.93 area. So if you're going to buy this stock, I mean, shoot, I'm even thinking about buying some. Because you're at a major support area. Y'all see that? Major support. Wouldn't you want to buy something at the lows? Okay. So we're at the lows. Okay. And I mean, those were the lows from March. No, that's 2018. That's 2000. We're at 2018 lows. I'm seriously thinking about buying this. Okay? For a long-term trade. Long-term investment. Sorry about that. As a trade, I want to wait for it to go up, down, because when I'm trading, I don't care about missing the low. I want to see it really get bought up to the upside. Go down, they can't sell it off, and it continues to go to the upside. Okay? Let's look at Visa. Bullish. 50-day. It's underneath it. 20-day and 50-day are angled down. That means there's selling pressure probably down to here. You probably want to put an alert right here to buy some. If you want to buy some for an investment, I think you can wait. Are you below the 50? Yeah, but I think, if you're trying to take a shot at it, this is the time to do it as an investment. Even though I think it can get down to this 220. You have some selling pressure. It has to break this trend line. See, that's trending down. It's gotta go up. In order for it to go up, it has to break this trend going down. So it looks like it wants to go here, then maybe it goes here, then it'll go down and then up, and then Joel will get in. But this 50-day is starting to go sideways, and this 20-day is going sideways. And then it went down and it crossed. That's not good. Because this is so close by, you probably can get it there. Now, using the Fibonacci, it's down about 50 to 75. So if you're thinking about taking a trade, it might go to here first and then reverse and hit the 200 and then go back up. Okay, so if you're taking a trade, I understand why people bought it here and here, because you would have been up the next 2 or 3 days. Okay, all right, let me see if there were any other stocks that I need to look at so I can go ahead and get up on out of here. I don't see any. Sorry I didn't do the voice. I did a couple of voices today. All right, guys. So I'm going to get on out of here. It's 3 o'clock. I'm coming to you guys from Decatur, where it's greater. But before I leave, I want to make sure that everybody knows to sign up for my webinar week, which is in 2 weeks. It's September the 1, 2, 3, 4, 5, 6, September the 7th through the 9th. Make sure that you guys sign up for it. If you want consultations, next week is going to be the last week that I do consultations before webinar week. Y'all know I don't do any consultations during webinar week. So if you want a consultation, get it in next week. I was booked this week. All right. And I'll be booked next week, and then I'll take a week off because I'm going to do webinar week, and then I'll do consultations after that. So I'm coming to you guys from Decatur, where it's greater, and I'm out of here, guys. Enjoy the rest of your weekend, and I'm out. Peace.